Welcome back to Invest and Talk podcast. Today we're taking a close look at Gerdau SA ADR. You sent us information from recent market data and a pretty detailed due diligence report. So our mission is really to unpack what's most important for you to understand about the steel producer right now. We'll cover recent performance, financial health, potential risks, opportunities, and, what analysts are saying. Okay, let's get into it.
It's interesting looking through this. The first thing is, even without specific recent earnings reports or like major announcements in the material you sent, the stock price for GGB actually shows an upward trend. It was sitting at 2.605 SAS as of April 24, 2025. And some projections even point towards a significant climb over the next year. What do you think might be fueling that optimism, given the lack of immediate news?
That really is the central puzzle, isn't it? Because the analyst sentiment seems to be in two camps. You've got some anticipating further gains while others are, foreseeing volatility. What fundamental factors could be driving such, different outlooks right now?
I think a key element to consider is the broader steel industry landscape. It's inherently sensitive to global demand, the costs of raw materials, things like iron ore and scrap, and geopolitical events, too.
Right.
You really need to keep an eye on trends in construction and infrastructure development globally. Those are significant drivers. What stands out, though, is understanding precisely how these big picture factors are likely to impact Gerdau's specific operations and markets.
Which then brings up the question of competitors. How are Gerdau's competitors maneuvering in this environment? I mean, it seems like a reasonable assumption that they're prioritizing cost efficiency, maybe looking to broaden their product lines. Gives us a sense of the pressure.
That's a fair assumption. And we also need to factor in the regulatory environment. Things like trade policies, tariffs, environmental regulations. How might evolving rules there create headwinds or maybe tailwinds for Gerdau?
Good point.
Then, if you zoom out even further, you've got macroeconomic shifts,
Yeah.
interest rate adjustments, the overall health of the global economy. That'll undoubtedly play a role in steel demand, and so Gerdau's stock performance. Considering all these interconnected pieces, it gets complicated.
It really does create a rather intricate picture. We see a degree of investor enthusiasm around Gerdau's potential for growth, with some seeing it as a compelling opportunity. But, it's always wise to approach any information, especially stuff from social media or unverified claims, with a healthy dose of skepticism. So given this recent upward movement in the stock price, maybe linked to its longer-term trend since the early 2000s, anticipated growth, that positive market feeling, what are the key considerations for someone looking at this for the long haul?
Well, when we start digging into the due diligence documents you sent, we notice that specific recent revenue figures aren't actually included. That just underscores the importance of, consulting official financial filings, their investor relations page, SEC filings.
Yeah.
The 3 to 5 year revenue growth pattern, it shows fluctuations, which makes sense, tied to market conditions.
Yeah.
So examining their historical financial statements in detail would be crucial. Similarly, earnings per share data isn't present right here, directing us again to their recent quarterly reports for that info.
We do have a couple of interesting financial data points, though. The price-to-earnings ratio for GGB is around 5.87, based on normalized figures. It's important to remember companies in the steel sector often have lower PE ratios because the business is so cyclical, right?
That's a critical lens, yes, due to that cyclicality. So what does this relatively low PE potentially suggest in Gerdau's case? Could be undervaluation or maybe lower growth expectations. Now, we don't have the debt-to-equity ratio in this information, which is another vital metric. You need to check that in their financial reports to gauge their leverage.
Got it.
Likewise, recent years' free cash flow figures aren't provided here. So a review of their cash flow statements is necessary to understand their ability to, actually generate cash after investments.
And the return on equity, or ROE, for GGB is approximately 10.15%, again, using normalized data. Interestingly, this seems lower than a peer mentioned, CMIN3, which sits way up at 31.08%. What could account for that difference in profitability? Is it efficiency, maybe debt use, or just the markets they serve?
Could be a mix of those. When we shift focus to the business and industry dynamics, Gerdau's primary competitive edge seems to be its significant scale and its ability to maintain cost leadership, particularly within Latin America.
Okay, so scale helps.
Definitely. Their market presence is strong. They often hold leading positions in their key regions.
So, considering the major industry trends you mentioned, growth from infrastructure, rising demand for sustainable steel, what potential challenges and opportunities do you see for Gerdau, especially with fluctuating raw material costs, regulations changing, and that low-cost competition?
Well, the growing emphasis on sustainable steel is a really salient point. It could mean needing investments in new production methods, maybe new tech, possibly increasing costs in the short term. But on the flip side, it also presents a significant opportunity, doesn't it? To capture a growing market segment that values environmentally responsible practices. Now, turning to management and governance, the track record of the CEO and key executives isn't detailed in the material provided. That's info an investor would definitely want to seek out on their corporate site. Similarly, we don't have any data on recent insider trading activity here. Again, check SEC filings or financial news.
Right. Moving on to valuation and risk, the price-book ratio for GGB is about 0.66. Now, for investors focused on value, that could suggest the stock is currently trading below the book value of its assets. For someone looking for potential value, what are the nuances with a PB like that?
It's a potential flag for undervaluation, yes, but it's essential to consider the quality of those assets. Are they productive? And what's the company's ability to generate future earnings from them? A low PB isn't automatically a buy signal. We also don't have specific info on the dividend yield and the consistency of their payouts in these sources. That's really relevant for income-seeking investors.
And the beta, the measure of volatility.
Not provided here either. You'd need to check financial analysis platforms for that to get a sense of how much the stock price might swing compared to the market.
Okay, so the main risks that really stand out from this information seem related to the supply chain, especially that volatility in raw material prices and logistics, and also regulatory risks like trade policies and environmental rules. How significant are those typically in steel?
Oh, pretty inherent risks within the steel sector. Raw material costs, particularly iron ore and scrap metal, they can be incredibly volatile and directly hammer profitability. Similarly, trade policies, tariffs, anti-dumping duties, environmental regulations, they can all introduce significant uncertainties and compliance costs. It's part of the landscape.
Makes sense.
And when we compare Gerdau to its industry counterparts, those lower PE and ROE figures we talked about, well, they could imply either an opportunity for future growth, maybe the market hasn't recognized it yet, or simply that the market has lower expectations for its profitability compared to some peers. We also don't have any specific recent news or major events highlighted in these materials, so staying plugged into current developments is pretty crucial.
Okay, so just to recap some basics from the info, Gerdau SAA is a major global steel manufacturer, specializes in long steel products, operates across Brazil, North and South America, serving big sectors like construction and automotive. Their product range is quite extensive: rebar, nails, billets, slabs, etc. The last mentioned closing price was $3.11, and that 52-week range of $2.92 to $4.46 certainly suggests a fair degree of price fluctuation.
Volatility is definitely part of the picture. Their market cap stands at $6.65 billion, and we see a PE ratio of 6.03 in this particular data point.
Which is slightly different from the 5.87 we mentioned earlier.
Right, and what does that slight difference underscore about financial data? It just highlights that different sources, different calculation dates or methodologies can lead to minor variations. It reinforces the need to look at a range of data and understand its context. Don't rely on just one number.
Good point. Now, when we consider potential red flags versus strengths, a notable strength seems to be their geographically diverse operations. They're not reliant on just one region. That, coupled with varied product offerings and a pretty significant trailing dividend yield stated here is 7.09%. For investors prioritizing income, what key questions should they ask about a dividend yield that high?
A high dividend yield like that can be attractive, absolutely. But it's vital to assess its sustainability. Is it safe? Investors should look at the company's payout ratio, how much of its earnings are paid out, its free cash flow generation, can they actually afford it, and its historical dividend policy. Is this yield likely to be maintained, or could it be cut if times get tough?
Okay. And conversely, potential red flags include that reliance on volatile raw material prices we keep mentioning, and the sensitivity of steel demand itself to broader economic conditions. That can create periods of, well, significant market fluctuation.
Definitely. Now, regarding market sentiment and their position relative to competitors, we don't have recent analyst ratings or specific news details here. However, their established network of steel mills and their apparent ability to adapt to different regional markets seem like key competitive advantages. You mentioned major competitors earlier: ArcelorMittal, Nucor Corporation. big players.
Right. So looking ahead then, potential positive catalysts for Gerdau could include strong earnings reports, maybe showing improved profitability, or perhaps successful launches of innovative products, maybe expansion into new markets.
Those would certainly be positives. And the primary risks to keep monitoring are those changes in regulations, particularly environmental standards and trade rules, plus any significant downturns in global or regional economies that could really dampen steel demand. Based purely on the information we've reviewed here, the summary recommendation provided suggests a hold for income-focused investors, mostly because of that high dividend yield.
Okay.
For those considering buying, though, keeping a close watch on market conditions and their upcoming earnings releases is advisable. That relatively low PE could point to undervaluation, but as we said, it might also just reflect more modest expectations for future growth. So thinking about your own investment approach, what resonates most strongly from this whole overview? What are the key takeaways for you?
Okay, all right, let's try and bring it all together. Gerdau presents, well, an interesting picture. You've got this established market presence, the diversification across regions and products, and that noteworthy dividend. That's attractive. However, the inherent ups and downs of the steel industry, its cyclical nature, and that dependence on raw materials mean you absolutely need to stay informed about global economic trends and any company-specific news. Can't just set it and forget it.
Constant vigilance required.
We've really only begun to scratch the surface in this discussion, haven't we? And your next steps, if you're considering this stock, would logically involve a much deeper look into their detailed financial statements, income, balance sheet, cash flow. Also, a more thorough comparison with their competitors, looking beyond just PE and ROE, and definitely trying to understand the specifics behind those differing analyst forecasts. What are they seeing?
Good summary. Further homework is definitely needed.
Thank you for providing these sources for us to look through. We trust this has offered you, our listener, a more informed perspective on Gerdau. Remember to subscribe, like, and perhaps leave a comment to let us know what other companies or topics you'd like us to explore like this.
And maybe here's a final thought for you to consider. With the increasing global emphasis on building sustainable infrastructure, green steel, lower carbon footprint, how might this long-term trend, beyond just the typical market cycles, fundamentally reshape the opportunities and challenges for a company like Gerdau? Something to mull over.